You're listening to AI Prism from Seoul Economic Daily.
It's Thursday, June 4. Here's why global investors are paying attention to Korea today. If you're looking at your Asia portfolio right now, you are basically watching a massive tug of war. We've gone through today's Seoul Economic Daily reports for this deep dive, and while our mission is to map out these conflicting forces.
Right, because on one side you've got these brutal macroeconomic headwinds, and on the other, just surging AI fundamentals.
Exactly. And right in the middle is the hashtag CoSPI index. Now, to understand why the hashtag CoSPI reacts so violently to these global currents, you have to factor in the Korea discount.
Which is basically the historical undervaluation of Korean stocks compared to their global peers.
Right, mostly due to geopolitical risks and corporate governance issues. It leaves the market incredibly exposed to outside shocks.
And that exposure is exactly why today's U.S. macroeconomic data is setting off alarms across institutional desks.
Yeah, let's look at the U.S. ADP private payrolls report. It came in hot at 122,000 jobs added, beating the 110,000 forecast.
Which acts like a financial gravity well. A strong U.S. labor market keeps the Federal Reserve aggressive, pumps up the dollar, and crushes the won.
And historically, when the exchange rate drops below 1,400 won per U.S. dollar, it triggers foreign institutions to just systematically dump Korean equities.
Yeah, and this currency squeeze is hitting at the exact same time as a severe physical margin squeeze. Iran just executed a new strike on Kuwait's civilian airport.
Wait, and the U.S. retaliated on Kioxia Island.
Exactly. For global investors, this is all about Korea's Hormuz exposure. South Korea imports roughly 70% of its crude oil right through the Strait of Hormuz.
Because Korea's main export sectors, like semiconductors and auto manufacturing, require massive amounts of energy to operate.
Spot on. Any disruption in that strait causes an immediate cost of goods crisis. Central bank modeling shows that even a 10% spike in oil prices instantly eats into Korea's current account surplus by 0.3 to 0.5 percentage points.
Wow. So you have a weakening currency making oil more expensive to buy, and the oil itself getting more expensive due to conflict.
It's a double hit.
But with the currency and oil markets squeezing the region this hard, you'd expect Korean markets to be in free fall. But there is a massive counterbalance keeping them afloat.
Right, the artificial intelligence boom.
Yeah. The U.S. just slashed its mandatory review window for new AI models from 90 days down to 30.
Which is a huge regulatory green light for infrastructure demand.
But wait, I'm looking at Microsoft launching its own 35 billion parameter MAI Thinking One model specifically to rival Nvidia. Doesn't that spell disaster for Korea? I mean, their entire semiconductor value chain is heavily tied to Nvidia.
It's a natural concern.
Yeah.
But full-stack competition, like Microsoft entering the arena, actually expands the total pie for enterprise AI. More models mean more computation.
Right. They need the hardware to run it all.
And to process all that, you absolutely need HBM, or high-bandwidth memory. These are highly specialized memory chips physically stacked together to accelerate processing speeds for AI accelerators.
And the global supply of HBM is, well, completely dominated by Korea's SK Hynix and Samsung.
Exactly. So even if the logo on the AI accelerator changes, the memory inside is still Korean.
Oh, that makes sense.
You can see the sheer force of this memory cycle explosion happening in Japan right now. Look at Kioxia. Their stock just surged 3,900% to briefly surpass Toyota in market cap.
That is insane.
Right. Global first quarter NAND flash revenue jumped 83.7%. And why does this matter for you? Because Korean players hold 49.2% of that global NAND market.
So Kioxia's massive re-rating basically proves the underlying storage cycle is booming.
Exactly, which makes those Korean memory stocks look incredibly cheap by comparison.
Okay, so the underlying fundamentals for Korean tech are booming, but there's a major capital threat looming next week that could drain liquidity across the board.
You're talking about the SpaceX IPO on June 12th?
Yeah, the scale of this is hard to wrap your head around. They are targeting a 1.75 trillion US dollar valuation to raise 75 billion US dollars. That is approximately 107 trillion won.
Which is just a staggering amount of capital.
A stock issuance of this magnitude is going to suck immense institutional liquidity right out of the room. Funds will literally have to sell off their Asian tech allocations just to free up the cash to participate.
And that leaves you with a critical question for your portfolio over the next 2 weeks. Will the sheer fundamental gravity of the AI memory cycle be enough to offset these double headwinds?
Right, the strong dollar and the massive SpaceX capital drain.
Exactly. It's going to be a real test of whether AI fundamentals can power through a massive liquidity vacuum.
That's today's AI Prism, Global Investors. This episode was produced with AI assistance based on Seoul Economic Daily reporting and reviewed by a human editor. AI Prism is a Juan Ifra award-winning series. We'll be back tomorrow.
You've been listening to AI Prism from Seoul Economic Daily.